because I want you. Okay. All right, we're live again. Isn't this fun? We're going to do one more where Jocelyn, let me turn this down. Jocelyn is going to be hablaing in Espanol. Isn't she beautiful? I just love her. Okay, so let's get started. Today, I'm going to discuss how to qualify for a home loan if you are self-employed. And the definition of self-employed for this video is going to be someone that is filing a Schedule C on their federal Form 1040s. So they receive checks from individuals or they get 1099 and they file a Form Schedule C. Okay, why can't I turn that down? Okay. So welcome everybody. How are you? Happy Friday. My name is Teresa Timms. I'm president of TDR Mortgage and Real Estate Group in Upland, California. I specialize in mortgages and partner with all kinds of really, really great real estate agents and real estate folks. So if you're looking to buy or sell in Southern California, if you can pass along my name, that would mean so much to me. Okay, let's get started. So probably one of the biggest frustrations that consumers experience in the home financing sector is when they go talk to a loan officer like myself and they find out they don't qualify because there's a disconnection from, hey, I made $100,000 last year. And you can see it on my Schedule C. See right there, it says $100,000. And I say, yeah, okay, I get it. You made $100,000. However, being a self-employed person, you're not paying FICA, you're not paying any federal taxes, state taxes, you're not paying any of that. So all of that money is going to you. Then when you go sit down with your tax galler guy, you have auto expense, you have office expense, maybe you pay other people, you have mileage, like you just have all of these expenses. So you're showing $100,000, but Jeffrey, you wrote off $75,000. So your adjusted gross income is only $25,000. And so you and I both know that ain't even gonna get you like a mobile home in Barstow right now. Like no, you're not gonna purchase a home in this market. So if you are in a situation where you're earning income and you want to qualify for a home loan, the first thing that you should do is get in touch with a trusted mortgage professional. Hopefully that would be me, but if not, go to your bank or go to your credit union or whoever and have them take a look at your taxes. Have them tell you what to do. And you know what they're going to tell you? They're simply going to tell you you don't qualify. So at TDR Mortgage, we do things a little bit differently. We're a more hands-on approach to income and assisting people in purchasing homes in California. And what that would consist of is a consultation where we evaluate your taxes and you say, hey, Teresa, I want to buy a $500,000 house. Then I'm going to say, okay, well, in order to buy that house, you need to make $100,000. So we'll use the same example. Jeffrey, he showed $100,000 on his taxes, but he wrote everything off. Well, in order to qualify for that house, you need to show $100,000. So next year, when you get ready to file your taxes, you're going to get ready to file your taxes. You're going to have to pay income tax on that income. And that's really the catch-22 for self-employed persons is, it's really great to get that income and, have it not tax-free. I'm in the same boat. But then at the end of the year, to be able to save enough money so that you can pay your taxes. That's why the stated loans were so popular with self-employed people back, before the crash. So I have got some tips for you because I'm all about solutions in lending. And I have been doing originating home loans since 1998. I pride myself on being a technician on guidelines and, you know, basically doing, helping people, doing what's best for you, not what's best for me. And that's one of our mottos here at TDR Mortgage is that, you know, sometimes it's a little bit harder to do something that's in the best interest of the client, but no matter what, that's like always at the top of our list. So, okay, tips to qualify. So the Schedule C self-employed borrower, it is so simple. It's so simple. Gross income is your total income that you earned. Adjusted gross or net is basically your bottom line dollar that you're paying taxes on with the IRS. So if you're qualifying for a home loan, you have to figure out the sweet spot in showing enough income to qualify, yet not having to pay the full, you know, the full nut on your taxes, which that can be kind of tricky. So if you need help in evaluating that, you know, you would have to get together and look at 2 years of your taxes and evaluate how we can make that happen. So there's really not, the one tip that I could tell you is that you need to have somebody look at your Schedule C. There's no way around reporting income and taking deductions and being able to qualify. It's so simple and cut and dry. So let's just say this is a perfect time for this video because you're self-employed, you're going along this year, you're making your money. Last year you made use this example. Last year you made $100,000. You wrote off 75. Last year you showed 25,000 in income. So in order to buy a house next year, we would need to get together so that we could discuss with you that you really need, if you want to buy a house, you really have to pay this much. You have to show this much income and you have to pay taxes on that. And that's a hard pill to swallow for a lot of self-employed people. And that's why when they get to us, they're so frustrated because, you know, let's face it, you know, people just don't have, you know, $10,000 or $20,000 laying around to go pay your taxes. But when you're self-employed, you need to set a little bit aside, or you're just going to have to put a big chunk down and do some kind of like bank statement loan or, you know, some other kind of alternative financing type loan. In Schedule C persons that are self-employed, when you're self-employed to qualify for a home loan, you need to be self-employed for 2 years, not a year and a half, not 1.75 years. It has to be 2 years. Now, there are some underwriting engines when we run them through. There's Fannie Mae and Freddie Mac, and depending on these, the results from the automated underwriting engines called AUS systems, these systems will generate findings, and based on a set of variables off of your cash, your credit, your income, it will come back, and sometimes it will tell us, you know, we need a limited amount of documentation. Sometimes it'll come back and say we just need 1 year of taxes. Gosh, if that's the case, then all we're going to do is show 1 year of your 1040s. And as long as we can show that you have been in business for the last 10 years, that falls within the guidelines of qualifying, and you're going to be in like Flynn, you're going to be a homeowner. So if you've been looking to purchase or to find out how you go about it, really the first thing to put in motion is to speak to a lender to figure out how you're going to put all this stuff together. Let me see. What else? In the past, I've seen people go back and they've refiled their taxes. So, hey, I want to buy a house so bad. I don't care if I have to, you know, pay more money to the IRS. And, you know, I can tell you who does not care about this is the IRS. Like, really? Oh, no, you're going to go back and refile your taxes to qualify for a home loan. And they're like this, oh, great, we're going to make $10,000. So that's one strategy. You go back and refile your taxes. However, I have known people that have done that, and you can't go qualify just because you file the taxes doesn't mean that we can use them. The taxes have to be validatable, which means you go file your taxes. They go through the system, and lenders do something called a 4506 income request. So we send a form to the IRS, and we double check what you reported. So we validate that that's the income that you reported to the IRS. Until we can validate that income, we technically can't use it. So in order to get you to qualify, a lot of times you'll have to wait. I've had people wait as little as 2 weeks, 4 weeks, 6 weeks. That's about the norm. And usually what I see is that when the IRS cashes your check, it's about a week later that we can validate that income. So that's probably about one of the biggest tricks that I know that I've used before, that other people have used before, is to go back and refile your taxes to qualify. And nobody has a problem with that because, like I said, the IRS wants to make more money. What else? How long does it take? I already touched on that. And should I prepare now? Yeah, now is the perfect time to get started and to give our office a call so that we can figure out how we can best help you. So if you or someone you know is interested in purchasing a home or refinancing, I'd like you to pick up that phone and give me a call at 909-920-3500. Let's see if we have any questions. New comments, but I can't see the comments. Why can't I see them? Well, can you see them, Jocelyn? I hate how you can't see them. That's a flaw. Let's see. All right, so we're just going to hang out for just a minute. What's everybody doing tonight? It's just a thumbs up. Huh? It's a thumbs up. Okay. All right, so I don't really see, oh, I have to put on my glasses, like thousands of Americans out there. Lunch next Tuesday. Oh, that's a different one. All right, well, I guess we're going to call it. Hopefully that would be me. But if not, go to your bank. Thank you for tuning in today. I sure do appreciate your time, and have a wonderful weekend.